All right, well, hello and welcome back to another weekly edition of Stock Market Mutterings Trade Review and Recap for the 12th of December. We've got a wild market on our hands, and I'm telling you what, we reached a critical level. This is a very important Stock Market Mutterings as we progress forward. If you guys need help trying to trade this market, you're confused, you're scared, you're frustrated, you don't know where to turn, take a moment, visit thelincolnlist.com, click on the Trade Room tab. You can start trading with us right away. Now, if we rewind to last week, I was talking about we are right here at this level, or this certain 260 level on the SPY. You can see the line I had drawn from last week, taking us all the way back to May 3rd support, back into October 29th area of support, and we immediately on Monday shoot right down through there and actually end up having a few prints a little bit lower. Now the market rallied pretty strong off of that, bounced right back up to 268-ish, somewhere in that area. And if you look here real close, you've got the 10-20 moving averages here I use sometimes as a guide. Regardless of how big the bounce was, it still stayed underneath of its near-term moving averages. So the last time that it did get down in here, it was able actually to bounce above the 200 moving averages on all the occasions. So back here in October, it bounced all the way back up over the 200 moving average right here. Then back here when it bounced, came back up over the 200 moving average. This time around, unable to do it, and by Friday, we rolled back over. Now, there's something I did not mention before that is really important, I think, as we go right into Monday, that's going to be the number of numbers for right now, that I didn't really notice that much until I took a deeper look this week, and that was, even though the market had gotten down into these levels, since this correction started in October, we did not close. So at the close of business, we did not have a close. I think it was under 263 on the SPY. So if you come back here and you look, yes, the market got down to 259-ish or whatever it was, but before the day was over, it was 263.80, somewhere in that neighborhood. You know, down here, 263 print stayed there. This last time here on Monday, we go all the way down to 259, but by the end of the day, back up to 263. So you've got to go all the way back into this area from April where we've had closes that were under 263. So we bounce on Monday, Tuesday, Wednesday, Thursday, Friday, selling. And before it's all over, closing down on lows, closing at one of its lowest closes here is the 260 cents. I don't know how accurate it is, but it's got to be sometime back in April. So what does all of this mean? We talked about it in the last few mutterings, and for you guys that are trying to learn how to trade and you want to know what's the foundation and the basis of trading, it's all about levels. It's all about price discovery and understanding where buyers are, where sellers are. What is this market trying to tell you? And closing down on those lows that it has not been at since April. However many months you want to go back there, is a significant, a seriously significant spot going forward here. Now, I think what we're going to see is more pressing lower. You've got a little bit of support if they want to draw it out of there from Monday. And I think the actual low was 258.62. So let's go with that as we press through Monday. 258.60s. Kind of the short-term line in the sand. If the market starts going underneath of that, you may see a little bit more panic. Now, one of the theories in my mind was we were going to end up eventually testing February lows, which the print low where was 253. So I'm kind of expecting we're going to see a challenge down in that area. Now, one of the things that the market does, and the stocks do that you trade, and the crap that we trade all the time, crap for lack of a better word, is it ultimately gets to where we think it's going to go. It's how does it get there? So when somebody sees a strong bounce off the bottom, they're like, okay, that's the bottom. Then it rotates and makes a new bottom, then it bounces. Okay, well, that's the bottom. It's how it actually gets there. So I'll tell you what I would like to see. I'm going to give you a few scenarios right here of what I would like to see at the beginning of the week. If you want to go with the long route, and I think if we're looking to do some buying, if there's any possible way this market can gap down and either that or just wipe people out Monday. And I mean that in a nice way. Wiping out means just stopping, not like wiping out their accounts. I hope that's not happening. But just wash this thing down to 255. Just start the day down there and just get that panic, okay? Because what you have not got yet, when people are looking for bottoms, you're absent panic here. You don't have that throw the baby out with the bathwater scenario, that capitulation point where the perma bulls have finally thrown in the towel. That's when the market will bounce, is when everybody finally gives up and writes it off for dead. That's when it'll bounce. And the way that we figure that out is through the charts and through the aggression and through the volume. So I think if you see that happen first on Monday, gap down, flush, you will have a buying opportunity, especially if this thing gets down into the lows of 255.50. You get somewhere around that, you are going to see the market bounce, I think. I think that would be a great scenario for those wanting to long, and you're looking at a series of laundry list of stocks that you want to buy. And regardless of what stock you're looking at, that's what I would do. I would look for the lows, deep support back into February, and if it tanked down into that, I would buy. Now, if the market gaps up, that just kind of throws a wrench into that idea. I think any gap up, your immediate value goes until proven wrong here, that you go short. You just find what's up and you start working things short. Now, it comes obviously with a... So you can't just, not just because it's up. I mean, you'll have to do your own research, technical analysis, all that good stuff. But for the most case, stocks across the board there, that's probably the best thing to do. Until this thing can trade back above the moving averages there, the shorter term moving averages, then you might be able to see a run at the 200. Nonetheless, you are definitely in a bear market here, and rallies are going to be few and far between and much short-lived. So let's move on to a couple individual names that we want to look at. Now, I get back and forth here a little bit with this Tesla. This, I feel, if the market wasn't in the shape that it was in, would probably be at 400. There's a chance that if things, I'll only say this if you've got a little bit of market help. Now, you don't always need market help with your stocks, but with market help, it will tail out some of the volatility that's in this thing because it's wild. You got some really crazy moves, especially early on. But maybe there's an outside chance that if this week does turn bullish, you go through this 380, you got a double top there, you might see this thing run towards 400. I mean, it's been pretty damn bullish, even though the market started selling off in October, and this thing was $260 back then, and now it's $360, $370. So, again, we're in a weak market, but you look at the chart, and this chart's telling you, reeking, that this wants to go up. Now, maybe it becomes a victim of the market as well, or, Tesla's Tesla, but watch 380. Just watch 380. As far as anything else, I mean, you go down the line, I've been a big fan. For me, I've moved from King Baba, which was a great stock to trade there throughout October, to Lord Apple. Let's just call it Lord Apple. This thing has been paying the bills for sure. And I like to do this. I like to find a stock I can get command of and get a really good understanding and just beat the shit out of it. That's what I like to do, whether it's long or short. And it has no bearing on how I feel about the company personally. I own Apple products, but you look at something like this and it's constantly making lows. It can't get out of its own way. Every single bounce is a short. We had a monster win on this thing Thursday coming off of this. This was just a gift rip right up here. But I think, you start seeing more selling. You got a bottom right here. I think 160 is going to come into play early on in the week with this. And if 160 gets down there, then maybe that's a good spot to buy. Maybe somewhere between 160 and February lows of 155. So again, when people are looking for bottoms, you have to ask yourself, what the hell does this bottom mean? What number is this? So when somebody looks at Apple and goes, okay, it's down from 220, it's cheap. No, not necessarily. Your next technical levels of support, where buyers are most likely to step in and finally say, look, this is enough, is 160 to 155. That's the number. That's what the chart says. That's where the closer you can get to that, the better off you are. And trust me, since this thing's been going down, there's been tons of people been walking in this trying to predict, okay, people thought it was cheap at 205. And then 195, and then, on down the line. So I like this one still until it quits working. I still like BABA too. I think if BABA gets underneath of 146, that's also a good short to continue to short that one. Netflix also, if Netflix gets underneath, it had one great day, was stubborn as hell like on Thursday, but you get underneath 258s. Big levels on these, big levels. So here's the deal. You're going to find the same kind of setups with all the stocks. Pick your poison. The thing here is we got to pay attention to that level and how it reacts. And I would say the consensus is probably going to be 90% across the board if it goes this way with the stock that you are trading, regardless of what the ticker is. We gap down and flush, or we just flush out first thing Monday early on, really shake it down 500-600 points. I think you will be at a level where a short-term bounce is extremely probable, and you'll want to take that long stance. That's where your value will be, and you want to get a list together to pick up deep. I mean, find you stocks that have deep supports to them, that go back for long periods of time. Get them down in there to February where they're really going to anchor in. That way you know you're at an important level, and go with those. If that does not happen, and you see some gap up on a news event, or the market's trying to gap up to see if anyone is interested, you're short on gap ups. You're basically short on gap ups, long on gaps down. So if you're really looking for that market to turn around or to see a short-term rally, I think we've got to flush out a little bit more. Now, this 260 may hold, may firm up there a little bit, because it did still close about 50 cents above that. So we shall see. We shall see, right? We shall see. So anyway, if you guys need help, it was a great week with us. Last couple of weeks, this is awesome. I personally love this market. I know not everybody's going to agree with me, but damn, do I love this market. If you need help with it, take a moment, visit thelincolnlist.com. Click on the Trade Room tab. Until next week, trade well, take care. Talk to you then.